Oh man, Trump's tariffs wreak havoc across markets. The question on everybody's mind is now the time to be buying? Am I buying this Trump crash? We're going to get into that and a lot more. If you like this type of content, smash the likes. Do not forget to subscribe, guys. It's been a period of pain here, but despite that, I hate to say it, but Bitcoin's acting pretty strong, sitting at 82.5K. But, of course, the damage from the Trump markets is evident. I'm going to break down exactly what I see across the markets. Am I buying the dip on Bitcoin, and which altcoins am I looking to buy the dip on? Loads to get into this video, so make sure you smash up the likes. Do not forget to subscribe. Now, if you actively want to trade with me through this market, you can do so in our Telegram community, ijazcrypto.com/TG. Jump in, links in the description. You can see all my trading analysis, my insights, and exactly when I'm taking a new trade. Okay, so let's start off by, where do we start with this? Let's just start off by taking a look at what the reaction has been. If you've not watched my video before this one, breaking down what the actual tariff announcement was, it'll be worth you while you pausing this and go watching that video as well, so you know exactly what happened just a few hours ago. But now we need to look at the response, right? Markets are waking up, and we need to look at how are they responding, because remember, Trump announced this in the aftermarket. He wasn't confident enough to do it while the markets were open. He did so afterwards, knowing full well there would be a bloodbath. So if you take a look at the Asian markets, they responded as you'd expect, right? In the red, you can see the ASX down 1%, the Nikkei down 2.7%, guys. That's painful. Painful, 2.77% down. Then if we jump onto Europe, which opened up thereafter, we'll start off with the FTSE down 1.37%, the MIB down 2.2%, CAC in France is down 2.63%, the DAX down 1.93, call it 2%, and of course the stock 600 down 2% as well. So suffices to say that the markets have been wrecked across the board here. Now, of course, the US market is due to open up in a few hours. The pre-market is an absolute bloodbath. I mean, the NASDAQ futures are down close to 4%, guys. S&P close to 3.5%, and the Dow, which is supposed to be your safe bets, close to 3% down. To put that into perspective, Bitcoin is flat today, but yesterday it priced in the data, right? Because you can trade Bitcoin through the night. So as the data came out from the Trump tariffs, the day ended up down 3%. Right? So 3.1% is down on Bitcoin, this volatile crypto that's, supposed to be up and down. And yet when you're looking at the traditional markets, they took a whacking as well. So now we need to take a look to see, how are markets responding? We'll kick off with China being one of the bigger economies. China firmly opposes this and will resolutely take countermeasures to safeguard its own rights and interests. The United States has drawn the so-called reciprocal tariffs based on subjective and unilateral assessments, which is inconsistent with international trade rules and seriously damages the legitimate rights and interests of relevant parties. They're not messing around, right? They're not messing around. If you take a look at Europe as well, Europe is coming out saying Trump will buckle under pressure if Europe bands together over the tariffs. And this is the risk for the US, right? Like I said in my video yesterday, if the US wants to fight each battle one by one, I'm pretty sure they can handle most of these economies given how much they import and how much they spend as an economy. The problem is they're going widespread. And I think that's why these tariff announcements were so shocking. It was the breadth and the width of it. They were so widespread across so many different countries. They were so strong in terms of the percentage amount as well. That is why we're getting the pain in the market. Now, of course, had Trump have just come out and done a 10% blanket one on everybody, even then maybe markets would have taken it a little bit negatively, but it wouldn't be this. It wouldn't have been a bloodbath like we're seeing right now. Now, the other interesting thing I'm seeing, because I'm seeing a lot of people kind of say, no, but what's wrong with a tariff? If a country's tariffing America doing a reciprocal one back, what's wrong with that? I mean, that, first of all, politics aside, this fundamentally shows your lack of understanding of the topic here. Because what's important here is we need to understand what is going on. If it's a reciprocal tariff, that's fine. Nobody ever said that's wrong. But what's actually going on here is the numbers are made up. If you look at the Trump chart that he was sharing to suggest, what the rates were, they're plucked out of thin air. In fact, it's not plucked out of thin air. It's plucked out as a number, which is the number he needs. And I said that in my video earlier on today as well, which is that he's just reverse engineered what his trade deficit is, and he's just showed that as the percentage when it's not true. Okay, so let me spell this out for you. So if you take the EU, right? You can see here on the breakdown, there's $235 billion surplus, right? 605 billion exports. If you take the ratio of that, it's a 39% implied deficit. Okay, it's a deficit. So in other words, what he's showing is he's just showing how much more are we importing than we exporting, and what is that as a percentage, and therefore what would the tariff need to be for us to be balanced, and we're just going to set it as half of that to show that we're nice and we're not doing the full 39% in this case on EU, we'll do half of it. Right? And the same math checks out for Indonesia. 17.9 divided by 28.1 gives you the 64. Look at India. 45.7 divided by the 87.4 gives you 52%, etc. And it checks out for Vietnam as well, and you can do it for the others. They've just reverse engineered the numbers. This is not the actual tariff rate being applied on US goods. Now, they're going to class it as, oh, these are trade barriers, or, oh, this country is using child labor, so we need to price that in as well. But it's just not the way it's done, right? It's not the way it's done. And this has now led us to having some of the worst tariffs we've ever seen in the global market. And that's going to, of course, have ramifications. So let's now zoom back in to our little crypto world as little crypto investors. And there's red, right? You're looking at Sonic down 4.7% today. You're seeing the dollar index, more importantly, doing this, right? When the dollar index does this and gaps down to the downside, that is telling you one thing. Risk is rotating to the downside. And that's very, very important to understand, okay? Normally, this would indicate risk is on, wouldn't it? Right? We want the dollar index to go to the downside, don't we? But in this case, what is it telling you? It's telling you that people don't want to be in the dollar. Remember, this is a weighted currency basket of the dollar versus other currencies like the euro, the yen, etc. So what is this telling you? It's telling that people don't want to be in the euro, and the US is going to be affected by this. You're seeing the US 10-year government bond price fall to the downside as well, which means the implied yield will be going higher as well. And ultimately, for our crypto perspective, we need to decide, are we going to be buying the dip? Is there more downside to come? I've made my view quite clear. I think there's more downside here. The trend is to the downside. You cannot disrespect the trend. We've been below our EMA ribbon for a long period of time here. We can't just suddenly say, oh no, everything's going to be okay, and bury our head in the sands and just buy the dip and hope we go to the moon. No. The last attempt we made here to break out of our Bollinger Band, which would have incidentally reclaimed our EMA ribbon as well, failed. We got rejected, wicking candle to the downside, and we're back here at the bottom end of our Bollinger Band. If we zoom up to the weekly time frame, you start to see exactly what's going on here, which is that we are testing the bottom edge of our Bollinger Band. Now, if we bring out our EMA ribbon as well, you'll see how that ties in. I know this chart's a bit messy, but I just want to show you that the bottom of the Bollinger Band and the EMA ribbon is in this level, which traditionally would indicate this is a nice area to go long, right? I've always said that. Buying from the EMA ribbon in strength is a good area to buy the dip. And so I will be buying the dip, but I won't be catching a falling knife. And I think that's very important to understand, is just because I'm buying the dip doesn't mean I don't think there can be more pain. In fact, I think there will be more pain. I've called out 72 to 74 as a nice area, this yellow line to where my cursor is right now as a range, to go and back test that level. I still think we will probably head into that direction if this pain persists. Now, from a macro perspective, what we will need to see for this to ease is that we would need to see either countries backing down or Trump backing down in order to see a quick resolution, right? And it could happen. It could happen. It could be that some of the major countries sit down, have a conversation, negotiate, and say, guys, this is not sensible. It's not sensible for anyone. It's not sensible for the global economy. It's not sensible for you, Trump, and the US. You're going to drive your economy into a recession, which is not what you want to do. Let's just sit down, be sensible. I know that what you're trying to do is get to a reasonable approach. What is that? Because I think ultimately what you've got at the moment is that Trump wants to be somewhere over here on the right-hand side. And so what he's doing is he's over-egging it even further than where he wants his negotiation point to be, hoping that they come back to his negotiation point once they sit down, right? That would be the reasonable businessman logic that maybe he's applying here. So if that's the case, then we need to be prepared for a quick V-shaped recovery, because ultimately, if it gets fixed quickly, we should bounce quickly. And I think that's important to understand, is if the tariff situation gets resolved quickly, there would be none of this fear around what's getting priced into inflation. Is it going to affect purchases? Is it going to cause us a recession? No, it will just get unwound from the market. And the market has been winding that in, right? The reason we've been getting all this pain since January is fear around this Liberation Day, fear around these tariffs. The tariffs he started with Canada and Mexico and China, and of course the wide sweeping ones he announced last night as well. So naturally, if things get better, we'll recover quickly, which is why I want to be in the market. Now's not time for me to get on the market, sell, be on the sidelines, sit there and go, oh, when everything gets better again, then I'm going to buy back in the market. Nope, I'm in the market. I'm staying in the market, and the further we dip here, the more I'll buy the dip, okay? And if we do dip below 80,000, I'll start nibbling. If we get closer to kind of 72 to 74, I'll buy in heavier chunks, and the lower we go, the more I'm going to buy. Now, if we do lose our EMA ribbon at 76,000, which is a weekly candle close below 76, we have to understand that we've lost the trend then on the weekly chart as well. Already, we don't own the daily chart, right? The bears own this daily chart, but if we start closing below that 76 level on the weekly chart, we lose the weekly chart as well, and that wouldn't be a good look. That's going to suggest a much longer, slower recovery for those who think we're going to quickly get back to 110,000 on Bitcoin and where your altcoin bags were, November, December time. So that's my stance here on Bitcoin. I guess the question now is, which altcoins are undervalued, right? Which ones am I looking at? I'm going to share that with you now. Now, what I've done here is I've added the column here from all-time high. Again, giving you all my secrets, guys. Giving you all my golden nuggets. And it gives you a percentage, right? It tells you the coin from all-time high. Because I see some people making the mistake of like going down to an altcoin, looking at, let's say, Cardano and saying, oh, I want to buy at this level. Now, if you've monitored the chart quite well and you've got key support and resistance levels historically, that's fine. But another way I like to look at this is I just like to look at how far projects have come from its all-time highs. And that will give me a good indication of what's giving me good value right now. Let's take a look. So you got Ethereum, of course, down 64%. From all-time highs, 64%, guys. I mean, that's incredible. $1,700 on Ethereum. Again, if we just jump on over to the chart here, I just want to illustrate a point. Again, just switch it up to the weekly chart. Let's take off some of these lines so we can make it look a little bit tidier. Here, look at this. This is the price you're getting on Ethereum, which dates back to October 2023, right? We're in April 2025. Insanity. And the worst thing is you're forming an M pattern here. Boom, boom, boom. It's nasty here on Ethereum. I mean, it's not a good look whatsoever. I mean, even if you were to draw some sort of an uptrend here on Ethereum, I mean, you've broken that, right? You've broken this ever so slight uptrend to the downside, and it's been a tough ride for Ethereum. That being said, am I ruling Ethereum out? No. I think this will be one of those that I'll look to buy the dip on. I might start nibbling on this now, in fact. I'll let you guys know if I do. But again, 1,400 could be quite a nice, juicy level here to top up some Ethereum. Working down the list, XRP down 48% from all-time highs, BNB down 26%, not too attractive on BNB. Solana down 61%. But again, you have to understand the context. Why are these projects down? I mean, one is the wider market. If a project is down just because the wider market's down, like the traditional market, which we just went through, then I like to buy the dip on that. But if a project is down because there's less usage on the chain, then that's a problem, right? And in this case of Solana, we know there have been issues with Solana. We know that the pump fund has been winding to a halt, and therefore that's leading to a bit of a pain. That being said, where would I want Solana to be for it to be a bit juicy? I need it a little bit lower. I need it lower than that. I mean, if I see if I can pull up the Solana chart here for you guys. Again, you're coming down to the Fibonacci 38.2 level at 107. I think around that $100 mark and even below 100 could be quite juicy. I'd have to evaluate at that point. But right now, I'm not buying the dip on Solana. Dogecoin down 78% from all-time highs. This is when you make your money on meme coins, guys. These are the times. It's not when Elon Musk is on Saturday Night Live buying the hell out of this coin. That's not the time. It's when everybody's forgotten about your favorite meme coin, whether it's Doge, whether it's Pepe, whether it's Shiba. It's all of these guys. It's buying in these periods and then relying on the hype to pick back up later on. That pumps your meme coin bags. Cardano down 80% is insanity. I mean that's just insanity, right? I mean this has been above $3 in the past, now sitting at 62 cents here. Super cheap on Cardano. Again, I've got a position in Cardano, so not desperate to add too much more. I can't believe Chainlink is still down 76% from all-time highs. Avalanche down 88%. That's incredible. 88% on Avalanche. Sui down 59%. Shiba, we spoke about meme coins, 87% down. I mean, it's just a bloodbath. I mean, this is why people are feeling it in this market, because Bitcoin's only down 25%, but nobody sits there with a sensible portfolio, right? Nobody is sitting there with a sensible portfolio. And the other irony is those who do have sensible portfolios, including myself, will have Bitcoin and a chunk of Ethereum. And the chunk of Ethereum is down 64%, which maybe you wouldn't have imagined in the bull run, right? In the upstep, as Bitcoin's heading to 110, it just wouldn't move. Let's keep going down. Let's see what else we find here. Down 30%, Polkadot down 93%, Litecoin down 80%. I mean, it is cheap. It's getting really, really cheap out there, and it's getting to that price points now where it's like, okay, I need to make sure I've got cash on the sidelines to start buying some meaningful dip. Now, like with any dip, do I buy the dip aggressively? No, especially when the chart is forming this kind of a setup where it's just looking to want to come further down and get rejected. And of course, we know the global macroeconomics as well. Now is not a time for me to be desperate and going, oh, here's all the money I've got on the sidelines. Let's open up my exchange and buy. No, I'm just going to nibble. And I'm going to have no FOMO. If Bitcoin wants to bounce and turn the other side, great. And by the way, while I'm recording this video, Bitcoin is falling. I mean, down 81.8 now. 81.8 on Bitcoin right now. Let me just jump down to the hourly chart. Yep, there you go. Ooh, painful candle, boys. Painful candle there. Let's just refresh here. Let's take a look at what the US is saying. But when that opens up, you're going to see some more pain, right? You're going to see some more pain. Maybe later in the day, you'll see some of that dip being bought up. But this is exactly why I'm not desperate to go in heavy. I just expect there to be more fear. I expect there to be more uncertainty, and uncertainty is not good for investors. I mean, you can see that in the dollar index, right? As I'm recording, continues to tank here to the downside, 101 now. Maybe that touches 100 quite quickly, and then maybe even falling below 100. Which would be quite painful for the dollar. Indeed. Tough market, but these tough markets are where you make your gains. I mean, I've just shown you how cheap some of these altcoins have become, and the reality is, these are the moments to do work. There is nothing to do when the market's pumping 80%, 90%, 100%. Right? Those are the people that are buying your exit. When you're trimming your profits, those are the people buying then. You don't want to be exit liquidity. So now is the time net overall. I'm not saying now this minute, but now overall as a theme is the time you want to be a net buyer. You want to be looking at this market going, where are the deals? Where are the opportunities that I want to buy in? And not just buy in just in this minute now, but over the next period, because I think it could be a little bit of a rush patch. I think it could extend for a while. I think countries, particularly countries like China, will be stubborn and not necessarily want to sit down with Trump, because remember, the first one to bend the knee is going to have, the weaker position. So maybe they're just going to have a bit of a cold war. I mean, there's a lot of worries kind of going on right now. The US could be triggering a recession. We got the jobs announcement tomorrow as well in terms of the non-farm payrolls. Lots going on. But that presents opportunities for the patient. Let me know in the comments what you guys are doing. If you actively want to short-term trade with me, swing trades, scalp trades, ijazcrypto.com/TG. Let me know in the description. Let me know in the comments, guys, what are you doing in this market? Which coins are you adding? Are you scared? Are you worried? Engage with me and I'll reply to each and every one of you. Thanks for watching, and I'll see you in the next one.